Good evening, everybody. Sorry for the delay. So what I'm going to do tonight, a lot of people have been asking, well, how do you get ready for or how do you identify when these big breakout potentials occur? So that's just kind of knowing what your pattern setups are telling you and where they're telling you they're setting up. So before we start, it looks like we have one seat left for the lake. So if you're really serious about refining your trading, again, we're going to go from A to Z, not so much to show you everything you've already seen, but because it's going to be in a chronological order, your comprehension of what to be looking for now puts you in a completely different frame of mind and a much more successful trading perspective. And it actually kind of erases some of the bad things that you've learned through the years. And I say you, when I started learning candlesticks, I kept thinking, man, this makes sense now that I understand it. Now I'm not doing all those other things that human nature normally does. Anyways, my suggestion, a free ticket to the Lotto Lake, all right. Well, we'll sell each Lotto ticket for $5,000. How's that? We still got things. No, I can't restart. Whoops. Okay, got things just downloading all over the place. So anyways, so one of our previous students said the thing that I really need to point out to everybody is that even though they had seen everything, bits and pieces, and they understand it or understood it, they recognized it, once they came to the lake and it was all put in order, it now became a powerful comprehension of what was happening versus having to learn it in bits and pieces as he went along. So, all right, so this is what makes me a lot of money, is these looking for the trading strategies that recognize the breakouts. And just to get rhetorical, the nice thing about candlestick signals and patterns is it provides you visually when there's been an obvious observable change. So what we're looking for, based upon the candlestick charts, is what type of pattern, what type of breakout, and giving us the results that we're expecting. Or we're looking for things to occur at levels that we can put 2 and 2 together, like a Frypan bottom bouncing off the 50, breaking out. That tells us a new dynamic in the next trade. So one of the most important factors, no echo here. Neil, are you logged in twice? I'm looking. Okay. Now I forgot what I was saying. That's just great. So I'm looking for things where I know that there's been an obvious change of investor sentiment, which you'll find as we go through this, we want to look for the pattern setups that tell you we've got a strong buy signal. Notice our Morningstar signal right on the T line. And what did we see happen? It broke out through this resistance level, telling us we were in the next move to the upside. Oh, Patrol, what's happened here? So if I see a setup like this, I always say observe the obvious. You've got a Morningstar signal at the end of a flat trading that acts like a mini scoop, and what do we expect coming out of a scoop? A slingshot effect to the upside. Not only usually is it pretty strong, but the fact that we have the T-line as a support level and they can't get through it and come up through the resistance level, it makes it that much more visually recognizable that things are happening. Now, the T-line is an important factor. Remember, the simple T-line rule. But if we see a candlestick buy signal and it closes above the T-line, we can stay long until we see a candlestick sell signal and a close back below the T-line. Same scenario on the downside. You see sell signals and a close below the T-line. The T-line acts as a downtrend until you see a buy signal and a close back up above the T-line. The T-line, Susan, is the 8 exponential moving average. Susan, I'm going to ask, where did you ever live in Pittsburgh, Pennsylvania? Okay. I knew Susan Haas when I was in high school. Do you recommend this for day trading on intraday time frames? Candlesticks, definitely. Penny, the definition of a candlestick signal is it is the graphic depiction of everybody buying and selling during a specific time frame. And that time frame can be 1 minute, 30 minutes, 60 minutes, a day, daily chart, weekly, monthly, any time frame. What you want to see is a buy signal and a close above the T-line. So I always tell people this is the most important screen on any training I do. The T-line. What is it? Well, we've discovered that it's the 8 exponential moving average. Now, if you combine the factor of the T-line, which is like a Fibonacci characteristic, it acts like a natural support and resistance level of human nature. Then you combine candlestick signals, which are the graphic depiction of investor sentiment. When you combine those two, you've got an extremely powerful or high probability chart analysis system. I used to make good money just trading off the candlesticks. The nice thing about candlestick charts is the top criteria for reversals are the signals. And then somebody showed Rick Sadler, who runs Hit and Run Candlesticks now. He was one of my first private training students. And when he came down from Alaska and sat in front of the computer screens, about 6 weeks later, he said, take a look at the 8 exponential moving average. There's an extremely high probability that if you close above it with a candlestick signal, you can stay long until it closes back below the T-line. We call it the T-line because we're trying to find a short name for it, since we use it so often as describing it. It's basically the trigger line. What are the other moving averages? I'll get to those as soon as I get to another screen. So one of the patterns, obviously, that we recognize is the Frypan bottom, which is a big rounding bottom. And where does it become relevant for a breakout? At the beginning of that Frypan bottom. Once it breaks through that level, it creates very high probability trade setups. So that's a couple weeks ago, we recommended pi. That's a nice arrow, isn't it? the Frypan bottom, and look where it broke out. Not only did it break out right here at the beginning of the pattern, but it gapped up through that level. So the moving averages on here are the 200 and the 50, which are the simple moving averages. Very logical reason why we have those on here. Because every major money manager around the world uses those moving averages to make their decisions about their portfolios. With candlestick signals, because they are the graphic depiction of human nature, we can see exactly what human nature, what signals are being formed at those levels, which is where everybody's making their decisions. The T-line is the black line, the 8 exponential moving average. And then there's the 3T line, which works in conjunction with the T-line. So the caveat to the T-line is the further away you move from the T-line, the higher the probability it's going to come back and test it. A Frypan bottom is usually a big rounding bottom. A J-hook pattern usually works much more quickly, and we'll get to that. Because this is where you started really your downtrend. I mean, you could see right in here that it was just kind of a congestion area. Then the pattern started here. Now, the pattern doesn't have to be exact. Let me find another one. For example, we recommended VC long ago. Look at the Frypan bottom. Once again, kind of started here, pulled back. When it came back up through this level, that was our breakout. Okay, reading. Oh, I know what I can do. I can make my chart. So we can see this is why the road map is very easy to recognize. Look where this uptrend started. There's our best friend signal. Doji, gap up above the T-line, coming up out of the oversold area. Where was our first logical target? Probably the 50-day moving average. Big sell signal. Then look what happened when it came back down here. Morning star signal starting back up. Now, if you're an option trader, knowing what a Frypan bottom setup looks like is if you're buying here and thinking you got a J-hook or a Frypan, where's your likely target? Up here. Comes up a little bit, does another buy signal. If you're buying here, where's your likely target that you want to watch? Right here. If it breaks through here, what's that tell us about our Frypan bottom? It's broken out. Where do you think the next likely target's going to be? So I can be buying calls here, I can be buying calls here, I can be buying calls here. Okay, so anyways, this is why we're kind of combining the using options because of the high probability pattern setups. The morning star is kind of right here. We had a big down day, a day of indecision, and then the third day opened positive and traded more than halfway up this candle. I'll find another morning star signal. So the important factor is the signals. And then seeing how it's creating a pattern, which also allows you to recognize where the pattern breakouts are occurring. So on a pattern like this, again, you can see the rounding pattern, you can see the bullish confirmation, you can see kind of your resistance level right, excuse me, right in here. And what do we know about a doji sandwich? Very simple observation. If we see a big move up and then a doji, what's our doji rule? It's going to move in the direction how they open after a doji. If we know that, after a big move up, what do we factor as far as the magnitude of this candle? It's usually going to be about the same as this candle. And if you know that, what's that tell you about the resistance level? It's not acting as resistance. So what's our simple trading rules of candlesticks? We're looking for buy signals when we're in the oversold area. Our stochastics below 20. But a pattern breakout is usually likely to occur when you're in the overbought area. Bob, it doesn't matter. All you're looking for is this pattern and whereabouts did it basically start. So it doesn't have to be exact. What we're looking for is this. Oversold areas, right? Or breakout? No, usually in the breakout you're probably already up in the overbought area. Again, you're looking for signals in the oversold area. You're usually expecting a pattern breakout when your stochastics have already gotten up to the overbought area. Susan, yes. A very simple rule. If you're buying based upon a candlestick buy signal, if you're trading, I'm a swing trader, so my trades are usually 2 to 10 trading days. So if I'm using a daily candle, I'm buying on a daily signal, and I'm selling on a daily signal. Paulette, that's why we're looking for the high price moves. There's 3 disadvantages when you're trading options. First of all, you've got a bigger percentage on your bid-ask spread. Then you've got your commissions, which will usually be a bigger percentage compared to buying stock. And third, you need to not only know the right direction, but you need to have a direction that's moving with a strong enough magnitude to cover your premium that you paid for those options and still make a profit. We did a session, not too long ago, I forget, on spreads, the benefits of trading spreads, which is a very simple process versus buying calls outright. Pablo, there's nothing you can do about what happens in the news. Now, when we go to live charts, I'll show you the factor that does keep you from getting whipsawed in and out. Should we wait until the right side of the sandwich day ends? Because I've seen sometimes it opens higher and the third day goes. If it does that, Shankar, all you do is you close out the trade. It didn't work. But remember what happens, what our expectations are if it opens positive after a doji. Remember the doji rule. The price is usually going to move in the direction of how they open after a doji. So if you can pretty much see that you're in an uptrend, you've had a breakout, you can see that that's above the T-line doji, and it opens positive, what should be your expectations? That you're moving higher. If it opens positive and closes back below the doji, what's that tell you about your breakout level? You didn't break out. Move on to something else. In this chart, the doji sandwich appears to be in the overbought area, right? Remember, a pattern breakout is usually going to occur when your stochastics are in the overbought area. Yeah, stochastics are 1233. Okay. Yes. So there are times. So that's exactly what John is saying. A false breakout. If this opened positive, what's our expectation? A strong price move. If it opens positive and closes back down here, what it tells us about our breakout. Didn't happen. Close it out. I bet you dime to donuts, every single one of you have been told to cut your losses short, let your profits run. But I bet you dime to donuts, too, that nobody's ever told you how to cut your losses short and let your profits run. With candlestick analysis, it's very simple. The signals will tell you when they're working and when they're not working. Now, they're going to work most of the time. Otherwise, we wouldn't be looking at them today. So, the nice thing about the statistical analysis of candlestick signals and patterns is they haven't been around for 10, 20, 30 years. They've been around for 300 years. The Japanese rice traders that developed them did not become wealthy. They became legendarily wealthy using a very simple indicator, and that was human nature. So I always tell people, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So another strong breakout is what we call the slow curve. And look at the what supported the slow curve. You were in an uptrend, you consolidated. Notice the nature of these signals. Dojis, inverted hammer, indecisive trading. But what couldn't they do? They couldn't close below the T-line. Where do you want to be buying? Probably as you're coming up through here. Notice where you are on this breakout. Your stochastics are already in the overbought area. But what's the results of a slow curve? Usually a big, massive move. Or a slow curve where you can identify that if it breaks out, but there was a doji sitting right here on the 200 after a slow curve. What is our doji rule? If it opens positive, it's going to trade positive. If it opens positive, what it tells us about the resistance level of the 200 coming out of a slow curve? It's going to trade positive. Where would we be buying? We'd be buying here. Where's everybody else buying? They're buying once they saw it confirmed that it got out of the through the 200, so they're just adding to our profitability. Don't algorithms trade today? I have no idea what that means, Shakar. Yes, we'll do live charts. Okay, so we can identify patterns that are going to tell us, is this always going to be a big breakout? Don't know. But knowing what the pattern buildup of investor sentiment is telling us is that if we're buying right here, the prospects of being in a big move is much greater when you're using candlestick charts. So what that creates for us is the probabilities of not only being in the right direction at the right time, but being in situations where the move is excessively big. Now in this case, since we had a little doji here and a gap up, we can be buying right here knowing we're confirming our pattern, but what's everybody else watching? Oops, they finally broke out through the 50s, so they're all jumping in well after we're in. So the other day, Texas Instruments, slow curve. Apparently earnings gapped it up. But look what happened here. Slow curve, breakout. If I was buying calls on that day, and the next day it opened down here, what did that tell me about my breakout? It wasn't there. Close out the position. If I'm buying calls on this day, why? Because I got a doji gap up, slow curve right at the breakout level. That's where I'm expecting a big move. Had this opened lower here again, I would have closed out the position. But the whole point of recognizing these patterns is because human nature works the same way time after time. We're just putting ourselves in situations where the probabilities of being in the right position at the right time is dramatically in our favor. So the difference between a Frypan bottom and a J-hook, again, what is the reoccurring factor? Usually a resistance level. So we know that if here's our buy signal, kind of a cradle pattern, look at all the dojis, close above the T-line. We also know a J-hook pattern is a wave 1, a pullback, and then wave 3 is usually the same magnitude as wave 1. Why does that become so prevalent? Because human nature works the same way time after time. Wave 1, wave 2, when it breaks out, we're in wave 3. What's the magnitude of wave 3? Probably the same magnitude as wave 1. Okay. So on any chart that I'm looking at, here's what we call the bullish flutter kicker. Notice we opened here, closed down here, dark candle. The next day they did a doji, but look where the doji opened. It opened above the previous day's open. That becomes your first clue that there's been a change of investor sentiment. And look where it occurred, right smack dab on the T-line. And what's our doji rule? If it opens positive, it's probably going to trade positive. Why do we call it a flutter kicker? Because if we took this little flutter out of here, which was our alert to get ready to buy on positive trading, you basically have a kicker signal, which is your strongest reversal signal. And if I can see this is setting up, I know that if this is wave 1, if this is wave 1, wave 2, wave 3. Wave 1, wave 2, going into wave 3. Pam, make sure you're up at the top of the screen that you're clicked on screen sharing. The further a candlestick moves away from the T-line and almost touching the upper Bollinger Bands, is it bearish or bullish? If you're getting, rule number 1 is the further away you move from the T-line and you see a reversal signal, the higher the probability it's going to come back and test it. So what's our rule about a hanging man in the or getting up in the overbought area? If it opens lower, you close out the position. Which candlestick patterns are strong so you will buy at the open, and which ones will you wait on? If you wait, how long you wait? All candlestick signals, that's the reason we're looking at the signals and patterns, is what are we looking for the next day? And that's part of our entry strategy training that we should be doing here in the next week or so. The logic says if you see a candlestick buy signal and you're waiting for bullish confirmation the next day, but if the pre-market futures are telling you the market's going to open up down 100 points, hey, you probably don't want to be jumping in. You want to wait to see what happens for that buying, or if there's buying. Suppose there's no gaps on the 2-minute chart. Can't see it open higher. Kenny, logically, if you're trading an intraday chart, yes, there's not going to be any gaps. But you will have hammers, dojis, bullish engulfing, bearish engulfing. Paulette, you can do whatever you like. If I'm ready to buy this and I see it opening positive, maybe I see it open and it's trading down a little bit. It's not doing what I expect. So I might, after 5-10 minutes, I might flip to my 5 and 10 minute chart. And then if it starts coming back up and comes back up through the open, That pretty much tells me on my 10-minute chart the buying has started, which means that my daily chart will confirm. Okay, so, I know what I was pointing out. A bullish flutter kicker is, this day is a dark candle, gaps up above the previous day's open, and goes positive. This is a doji sandwich, which is a bullish candle, then a doji, and another bullish candle. In both cases, the assumption or the expectation is the same. That's a reversal signal and there's going to be more upside. So if we know a J-hook pattern, and I probably could have put this into the classification of a bobble breakout. A bobble breakout is just merely a more defined or refined analysis of a J-hook pattern. That's why right now we're in micron. Notice the uptrend started with a kicker signal. Hold back. There's our first J-hook. That's a J-hook pattern. Why is this a bobble breakout? Because we can see there's a resistance level. In this case, it's a resistance level. In other cases, it could have been a 50 or 200-day moving average. But when it hit the resistance level, look where it pulled back to, right here to the T-line. The T-line is a very significant factor telling us as long as they don't close below the T-line, the bulls are still in control. And if they start taking it back up, if they came back up through this level, if it closed right here, I'm ready to buy in positive trading the next day, which we did. Same scenario on Western Digital. This is a J-hook pattern. Because it's not really showing you anything. This is a bobble breakout because it showed you there was a resistance level or a potential resistance level. Now you have a J-hook pattern, but it's much more defined. You saw where the sell signal occurred, and then you can see that they weren't closing below the T-line. When they came back up through this level, if I was long right here, I'm closing out right here. There's my bearish Harami. And what's a bearish Harami indicate? The buying has stopped. So I'm taking my profits. Where do I think it could go back to? The T-line area. Starts back up. I can either be aggressive and buy here with the expectation it's coming up here, and then I'll see if it goes through. If it doesn't go through, I know I've got a double top. I close it out. If it goes through, I know I've got a wave 1, wave 2, wave 3, or a wave 1, a wave 2, wave 3. Now, because I can calculate that, there's different option strategies, which is the Harami. The Harami is where it opens and closes inside the previous candle. I'll try to find a bigger chart to show the Harami. But the Harami, John, is the bricks and mortar, the bread and butter, the ABCs of candlesticks. Out of the 50 or 60 candlestick signals, we've narrowed it down to what we call the 12 major signals. That's basically 6 longs and 6 shorts. And they are probably going to produce 99.9% of all of your trades. It's not to say that you ignore the other 50 or so, but I tell people, learn the 12 major signals. If you recognize a signal and you understand the psychology that the Japanese rice traders attributed to those signals forming, you've got a grasp on what makes prices move in certain trends. You can do that in less than a week, and you now start getting the same grasp of what makes prices move as somebody that's been trading the markets for 50 years. If you bought the doji sandwich, where are your stops? Let's see if I can see a doji sandwich on here. How far back was our doji sandwich? Oh, if this is my doji sandwich and it starts trading positive, where wouldn't I want to see a trade back through the open? The Harami at resistance, yes. If you see a Harami, there's a bearish Harami. Notice you had a bullish candle. The next day they opened it below the previous day's close, and they closed it above the previous day's open. In Western terminology, they call that the inside day. In candlesticks, or Japanese candlesticks, that's called the Harami. So the important factor for identifying where these patterns are occurring is attributing or contributing, that's not the right word, simulating, that's not even the right, using resistance levels. Can I verify the buy point? If I was aggressive, I'm buying right here because it's done a bullish engulfing signal after its left-right combo. Left-right combo is a bullish engulfing signal after a doji. That tells me they're holding here at the T-line. Where's my next target? Up here. So I could be aggressive and be buying here, or I could be get better probabilities but lower profitability by buying when I see it break out through the resistance level. What would that be on the bottom of a chart, a buy? There's doji, best friend. We have, out of the 50 or 60 signals, obviously we've created the 12 major signals. The doji is one of them. A doji is that indecisive day where it opens and closes basically at the same level. What was I saying? 6 bullish, 6 bearish. I got to read the question again. Oh, what's at the bottom of the chart? The next thing you have is patterns. But then we also have about 18 what we call top-ranked signals and patterns. And that's a combination. There's a doji followed by a gap up, especially coming out of the oversold area. A doji followed by a gap up is probably your strongest reversal. It's pretty much telling you after a day of indecision, the gap up has told you not only have they made their decision, but they've made their decision with great force, and that's what we recognize as our buy point. Then we have the patterns, the J-hook patterns, the Frypan bottom. And so I get a lot of people saying, all right, when you go through the live charts, you come up with a lot of good charts. How can we learn all of them? And I tell people you learn 4. 4 that you can easily recognize and become a expert at them, which means you know exactly what should happen on that signal or pattern, where to buy, where it's not working, where the trend is continuing to work, and where to take your profits. If you become, and again, this is not rocket science. This is just identifying and utilizing the information that the Japanese race traders have provided for us, and it's all still based upon the same criteria, human nature. In Western Digital from aggressive J-hook, should I stay in? The answer is, have you seen a sell signal? How long do you stay in a position? Until you see a sell signal or a sell signal and a close back below the T-line. What can we assume right now? That wave 3 should be at least this magnitude, or wave 3 should be that magnitude. Which is the best friend? The doji followed by a gap up. In this case, it was a doji followed by a gap up and a close above the T-line. So, might not have recognized this the day it happened, but if you do your simple scan and recognize the best friend signal, what's our criteria for the next day? If it opens positive, probably want to be buying immediately. So essentially all we're doing is recognizing the signals and patterns that are dramatically going to put you in the right direction at the right time with a high degree of probability. Let's see. Let me go back and on the WDC Bobble, can you verify the buy point? Okay, yes. You could either be buying here or you could have been buying here. I'm in WDC from aggressive J-hook. Did I stay in? Yep, until you see a sell signal. So here's what, this is why I came back to this chart. If this is wave 1, wave 2, wave 3, coming up to maybe up in here, then what do you look for? Maybe a pullback that looks like this. Well, what's our upside objective? Possibly a move like this. So if this is 20 points from here to here, we're expecting 20 points from about in here up here. So right now we're about $55 or so on Western Digital. It could possibly go over the next, if the market stays steady or doesn't have a severe sell-off, it could go to 75. So what are the different option strategies? Well, one, I was buying calls. The August 55s, which is still about 5 weeks to expiration. The August 55 50s, I guess, and I forget what I paid for it. But with the idea, I can't remember what I paid for it. But with the idea, I think it was about $2.80. With the idea that if it goes to 75, obviously my 55 calls are going to go to 20. Now, does that always happen? No, you get moves where they go up and down or maybe pull back. But I'm looking for the longer term to move up here. Now, what's a more conservative approach? I can be buying some spreads. And depending on how risk-reward I want to be, I can buy maybe the 55s and sell the 60s. And if I can pay $1.90 for them, for that, if the stock goes to 60 over the next couple weeks, my $1.90 goes to $5. Or if I want to be real aggressive, maybe I buy a 65.70 for 80 cents. And if I hold, maybe for 3 weeks out, and if it gets up into that area, now my 80 cents goes to $5. So the different spread strategies, you've got different possibilities because you recognize or should recognize that's my potential move on a longer term basis, and here's potential move on a shorter term basis. Oops. On resistance level, positive trading, do you buy in the money, at the money, out of the money, and how much time do you buy? That's up to each individual. All we're trying to do is demonstrate what your logical trade setups are. Now, depending on each person's risk-reward factor of how aggressive they want to be, whether they want to buy way out of the money. If you're more conservative, obviously you buy in the money. I try to train people to buy spreads because that has three beneficial factors to it. One, if you're buying, I'm going to just use a number quickly off. Let's say a stock's trading at 50 and you expect it to go above 55 over the next 2 weeks. Maybe you're buying the 50s and selling the 55s. If you're buying the 50s at $2.50, if it went to 55, your 250 went to $5. But if you bought the 50s for $2.50 and sold the 55s for $1, now you've got $1.50 in that trade. If it goes to 55, your return wasn't 100%, like if you bought the calls outright. It's now 275%. Number one. Number two, if a stock's trading at 50 and you buy calls for $2.50, your break even is at $52.50. If you bought the spread for $1.50 net, your break even is $51.50. And then number three, again, you have less money exposed if it turns against you, you're probably going to come out with a less percentage loss on the trade. Okay. Oops, I haven't scrolled down in a while. This is the Doji right here, Ahmed. Doji followed by a gap up, your best friend. This is being recorded. Is there another 3 EMA T line? Is there another? Not that I know of. Okay, laboratory. Okay, all right. Okay, let's see. Maybe I bought it at 286, Brad. Why don't you start counting wave 1 from the J-hook pattern bottom? I can. This could be wave 1, this could be wave 2, this could be wave 3. Or this could be wave 1, this could be wave 2, and wave 3. Yes, and that's another factor. That's a whole other subject, that if you're owning stock going into earnings, the different strategies that we have, but that's a whole different topic. Harami is high lower than the previous body high. Harami is high lower than the previous body high. Let me find I'll try to find Harami still. The 3T line is more effective the further away you start moving from the T line. So logic says if you're above the T line, you're in an uptrend. If you're above the 3T line, you're still in a stronger uptrend. Okay, so the resistance levels are important factors when you're looking at the patterns and the breakouts. Slow curve, breakout. Little slow curve, resistance level. You can see the Doji, bullish confirmation, breakout. It just visually allows you to see what type of signals you're having and what happens. Notice this Doji gap up. There's your best friend. Your best friend breakout of a wedge formation. What's the results of that? Usually very strong price moves. So all we really want to do is identify where is the logical place that there's a new investment criteria. Look at our bullish engulfing, slow curve. There's a lot of times that if I'm watching something and I think the market's going to open positive the next day, I might be buying a half a position of calls right here. I'm definitely buying if I see it open positive coming out of the slow curve, breaking out through the resistance level. These are the type I like extremely well. Notice your bullish, or little Doji, bullish engulfing, and they gap up through the resistance, and then what do they do after that? There's kind of your bullish Doji sandwich. And what do we expect from a bullish Doji sandwich? More upside. So we've got a breakout with a strong gap up through the resistance level and a Doji sandwich. How long do we stay in this? Well, up here, look what happened. We got a bearish engulfing signal in the overbought condition. Look how far away we've moved from the T line. I'm probably taking off a good portion of the position. Yeah, this again, Brad's pointing out, this is not rocket science. This is just showing the different signals and patterns that have occurred in human nature time after time. Bullish engulfing. Oh, I think this was, yeah, this is this chart just expanded where we can see there's kind of your bullish confirmation right here at this resistance level, and they gap it up. I'd be buying here. Now, it finished as a doji, some indecision. So what am I looking for the next day? If it opens positive, what do I know? They're going to move it positive. Is Mark, oh, I don't know which one. Oh, yeah. So if you're buying here, a lot of people say, well, I don't know when to sell or when to take profits. That's simple, too. Where do most people buy? They buy exuberantly at the top. What type of signal do we have up here? A doji. That far away from the T-line. What's our simple rule of a doji? They're going to move it in the direction how they open after a doji. If they open this lower, I'd probably take off half the position. If they moved it down below the low of the doji, I'd take off the other half of the position. So I've already got a trading strategy when to buy and when to sell. There are tons of trading videos. Oh, okay. Okay, all right. Abdul, hold on to your individual ones. I can't do them here because we're on PowerPoint, but we'll take requests when I go to the live charts. Oh, it might just be sometimes I talk faster than I move the cursor, or it might just be your connection. Okay, where am I? Let's see. Looking for these type of breakouts. Or looking for a scoop pattern. Notice that we got a flat handle. Look what we have right here. This is your left-right combo. That's a doji followed by a bullish engulfing signal. And a doji bullish engulfing left-right signal is right up there on the top of the list. If you quantify the top strongest signals and patterns, that has very high probability consequences or expectations. So if I've got a left-right combo where I can observe that it did it right on the 50-day moving average, it closed above the T-line, now I've got a doji sandwich. What do I got going on? A scoop pattern. And what do we expect from a scoop pattern? A slingshot effect to the upside. What do we expect from a doji sandwich? More upside, confirming our slingshot effect coming out of the scoop pattern. And on this chart, I'll just kind of show where do you take profits. Well, what's the simple analysis that the Japanese rice traders have given us? Where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. So if I'm up in the overbought area and I've had a good price move and I see a shooting star, if it opens lower the next day, I'm taking my profits. Where do you think it's going to move back to? Back to the T-line. Now I can make another assessment of, if they're supporting at the T-line, maybe I can start buying back again. All right, so again, everything built into candlestick analysis is just simple logic. Look at the bullish flutter kicker. Opens here, closes here. When they gapped up and did a doji right here, what's all the information that we can assess from that move? Well, first of all, it's a gap up. Secondly, it's gapped up above the previous day's open. Third, it's sitting right here at this resistance level. Fourth, if it opens positive, what's our doji rule? It's going to move in the direction how they open after a doji. And if they do that, what type of signal do we have here? The bullish flutter kicker, which implies there's going to be a lot more upside. if stocks gap up and ends as a doji, do you buy that day or the next? I usually buy the next day, meaning I want to see it open positive the next day. Now, more than likely on this day, I didn't see it occur. But because there's this simple scanning techniques for finding the best signals and patterns, I would have found this by just scanning for the biggest percent moves on any given day. Oops, and there's a gap up doji. That immediately tells me if they open this positive, I want to be buying because it's going to create that bullish flutter kicker. So if I already know what constitutes a signal and how it's developed, I'm ready to buy immediately, knowing exactly what should happen after that bullish candlestick setup. And if I'm watching what everybody that does Western terminology or Western patterns, like wedges, I can see a wedge pattern setting up, and look what happened right here. There's my left-right combo, smack dab on the 50, right here at the breakout. I'm buying immediately on positive trading the next day. Do you consider pin, bar, or open and close in top third of candle as doji as well? Consider, I don't understand the question. You consider pin, bar, or open. Candlestick tail. You consider open, close in top third of candle as doji as well. Aaron, I don't understand the question. It doesn't matter. As long as you have a doji, it's telling you there's indecision. It doesn't matter where it's opening and closing. I've seen sometimes wedge patterns is not so pronounced. Well, then it's not a good wedge pattern. Go someplace else. The nice thing about our analysis is that there's 10,000 trading entities out there, and you'll find candlestick signals and pattern breakouts every single day. Yeah, there's 4 different sets of dojis. The gravestone doji is where it opens at the bottom, has the shadow way up to the upside, and then it closes right at the bottom. The dragonfly doji opens at the top, trades down, and then closes right back up at the top. A doji star is just a wee little trading range in a doji. And the long-legged doji, obviously, is a much bigger price movement during the day. To find the wedge pattern, you can see the wedge. See how it's kind of coming to a point, and then the wedge breaks out. Can you see that, AP? So these are what we're looking for. You can see kind of a wedge pattern here. So the bottoms are getting higher, the tops are getting lower, and then you've got your slow curve breakout. On the bearish side, you can see the bearish left-right combo. This little wedge, and then they break down. Not only do they break down, when it opens lower the next day, what is that telling you? 1, it's confirming your left-right combo, which is a high probability reversal. And 2, it's closing below the T-line, which is confirming that you're probably starting a downtrend. You have scan patterns set up for TradeStation. I think they're over there. Don, I know that we've got them for TCNet, Metastock, TC2000, Thinkorswim, Ninja Trader. There's a bunch more. I mean, our formulas. We've sent them or set them up for a bunch. I think it's over at TradeStation. That's probably that's That's the reason for our chat rooms, is everybody that's in our chat room is trading candlesticks. So you can ask questions about the logistics of candlesticks, meaning if you're trading TradeStation, you can ask that same question in there and people can point you right to where you find the signals or patterns. And then you've got the analysis part where you've got people in our chat room. We usually have about 130, 140 people in the regular chat room. And that's where you can learn how to utilize candlestick analysis much quicker because you can ask questions. Then we also have an option trading room where obviously the terminology is much different. You might, but I mean the cost of some of these buying the formulas are what, $19 or something. And once you put them in, you got them forever. Do you share your trades? Yes, Susan. That's the whole point of the chat room. Is each night I will put out a 2 or 3 stock picks in a video format in the members area. And I tell people it's not so they have stock picks. It's so that they've got a video to kind of get further confirmation or further learning of why those picks were being recommended. But on the other hand, I also tell people that I want to teach you how to do your own scans. And I was just giving the example, 2 days ago we put out, I think, 3 picks, and only one of them worked. But the process would have been that those 3 picks were picked out of maybe the final list of 6 or 7 or 8. And so if you're looking for 2 trades and only one of them is working, now you at least have a list to go back and find what the other 5 did, and you might find another good one there. So the other day we had 1 out of 3 work. Yesterday we had 4 out of the 4 of them work. Today, I think only 1 of them worked. We'll go through them. But the whole purpose for learning how to scan is so that you're not depending on somebody else. Once you learn, and especially if you decide to pick out 4 or 5 that you really want to become an expert at, now you're in a position where you never have to depend on anybody else for trades, because you know exactly what should happen based upon those signals and patterns. You have a very basic info on how to use options. I do, Jules. And we do training. We did one a few days ago just on how to do the scan. And it's probably going to be about late August, only because we're going to be up at the lake again doing the private training session until mid-August. But probably late August, we would do a full day Saturday training, which is taking all the option strategies, whether we use them or not, like writing calls against positions, doing the straddles, doing the iron butterfly, doing the all the different zippity-doo-dah ones. But we'll start with the when you buy calls and puts outright, when you buy spreads, when you do straddles, and how do you use how to use each signal or each trading strategy on particular trade setups. I joined the webinar, what option strategies? Ken, just like our trading strategy for candlesticks, we try to keep it as simple as possible. What I don't want to be doing is if I find a good trade setup for options, I don't want to be spending 45 minutes at night trying to figure out the best option strategy to go with it. I want to spend 5 minutes to see which option strategy. So we start with the basics of calls and puts, obviously, and then which spreads make the most sense, and mostly credit spreads, and mostly debit spreads, and then when does credit spreads make the most sense? Okay, so again, the forming of a wedge is the support and resistance level and the trading range compressing. That's what we're identifying to see when we have a candlestick breakout. That's the logical time to be buying. So the benefit is watching candlesticks, the candlestick analysis, and seeing what signals are occurring right at a breakout level. And why do these candlestick patterns and breakouts work effectively? Very simple. Common sense, the reoccurring use of human nature. What patterns we are in in a few of the silver and gold stocks right now, because look what happened to silver. You can analyze any chart you want to. A lot of people say, well, is this good for Forex or is this good for currencies by themselves? Candlestick analysis is the graphic depiction of everybody buying and selling whatever trading entity during a specific time frame. So if we see that silver is trading positive, we were buying pause when it broke out of this little Frypan bottom Bobble Breakout. And these are all just kind of recent. This is where gold started, on this slow curve breakout through the 50. Now we had another breakout just in the last few days. Okay. How do you define narrow bar? Is it the open and close of the bar? Is slim for narrow bar and high-low bar slim, then surrounding bars? I don't know what a narrow bar is. I know there's some programs that the bigger the volume, the fatter the bar is, or the lower the volume, it's thinner. I'm not worried about that. A lot of people say, how does volume affect your trades? Or how does it affect, is it effective with candlesticks? Price and volume have absolutely nothing to do with each other. A lot of people tell me they want to see the volume go up as the price goes up. If nobody's willing to sell stock and the price is going up, it's going to go up on lower volume. Now, the times that it is relevant is, let's say on this day right here, I don't have volume on here, but there was a big volume spike. I pretty much told you there's been a drastic change of investor sentiment. It's probably too late to enter it. So anytime you're too late, you're asking, should I be buying now? Your calculation has to be, how much more upside is there? Well, if this is wave one, maybe there's more upside. But anytime you see a trend moving and you're asking, should I be buying now? The first thing you should be doing is saying, all right, when should I have been buying? What was the instigation to start buying this signal? This will get you much more acclimated to say, all right, I'm watching this, and if it breaks out, this is where I'm buying. Now, why is this a good place to be buying? Because it's the beginning of a good breakout, number one, and two, if it opened up here and closed here, what did it tell us about our breakout? Didn't work. You close it out with a small loss. I did not sell gold and silver today because, let's see, I am pretty sure, and we'll bring up, I'll bring up the live charts here in a little bit. Penny stocks, it doesn't matter. Candlesticks are the graphic depiction of everybody buying and selling, whether the stock is trading at 25 cents or $250. We did close Newmont because of the candlestick signal. Now, the other ones still held up. I think PAS and AU still held up. And, yeah, penny stocks, you want to make sure your volume is complete. So here's what we do by putting the timing. Look at our little left-right combo that closed right here at the resistance level. If it opened positive, what did it tell us? We had a bobble breakout. What this does is it gapped up. In the old days, I would have thought, oh, man, it's gapped up. I don't want to be chasing this. Now I know that if it's confirming a signal and a pattern, I'm buying here, and then where might I be taking profits? What was our criteria when it was up here? Look how far away it moved from the T-line. So what do I do when if I bought here and it's up here? I flip to my 10-minute chart and see if it's holding up above the T-line on the 10-minute chart. What this boils down to still is I'm identifying situations very simply that is going to put me in the right place at the right time. Is it always going to be huge moves? Definitely not. But the probabilities of being in a big move is much more greatly in my favor. FUL, we recommended not too long ago. There's a morning star signal. Somebody was asking earlier. Morning star signal is a big dark candle. Then an indecisive day. It could be a doji. It could be a hammer. It could be an inverted hammer. It could be a spinning top. Anything that shows indecision. And then the third day is a bullish candle that closes more than halfway up this candle. Now, you can see the added benefits to this morning star signal. Not only was it a big candle that closed well above the halfway point, but it also closed above the T-line, and it also closed above the 200-day moving average that had been working as resistance. What does this tell us about buying the next day? You want to be buying on positive trading. Did a doji the next day. Now what are we looking for? We want to see it open positive and trade positive. So when we got a morning star signal followed by a doji sandwich, we call that a McMuffin, or basically your morning sandwich. But what does a morning star signal infer? There's going to be a reversal, more upside. That's one of the 12 major signals. What does a doji sandwich infer? There's going to be more upside. What does a combination of a morning star signal and a doji sandwich tell you? A high probability there's going to be more upside. But it's not at the bottom of the chart. No, but it's still a signal in a pattern. So that's what you're referring to right here. A morning star signal is still a signal. It doesn't necessarily have to be happening here. It can be part of a pattern. When you're looking at an option to buy on a breakout, do you consider things like open interest or implied volatility? Yes. When I'm buying stock, I want to have stocks that are trading greater than $5 and more than 200,000 shares a day. The greater than $5 is a function of every time I put on a trade using candlestick signals, I know the probabilities of things moving in my direction is greatly in my favor. So I want to get as much leverage as possible. Most brokerage firms will not margin a stock that's below $5. I want to be able to leverage it by margining. Secondly, the 200,000 shares a day is so that I'm not sitting there trying to get in and out of positions. If I'm ready to sell, I want to sell. If I'm ready to buy, I want to buy. I don't want to be sitting around for 10, 15, 20 minutes seeing if I can get my trade executed. So that eliminates the volume problem. I forget what. So if I'm buying options, usually I'm buying options in stocks that are trading much higher in price. If a stock's trading at 7, I'm more than likely just buying the stock. If a stock is trading at 80, I'm more than likely trying to look at the pattern and buy the options. But if the stock is trading at 80 and only trading 240,000 shares a day, not terrible for getting in and out if I'm buying stock, but the options volume is probably going to be very small. So I'm usually looking at stock trades where they're trading 1.2 million, 2 million, 5 million, 8 million shares a day, because the bigger the volume on the stock, obviously, the more liquid the options are going to be. Okay. Where are we? Okay, so the McMuffin is a good breakout, bobble breakout pattern. SSYS, nice Frypan bottom. And what do we look for at the breakout? A big price move, telling us there's new enthusiasm coming into that trade. So, if you learn the 12 major signals, the 8 plus or minus candlestick patterns, and the top ranked signals and patterns, what you're basically doing is you can narrow it down to the best 4 or 5 that you recognize. Oh, Raymond, we're in there every morning. Starting the chat room is always open, so you can come in. Susan, if you go to our candlestickforum.com site, they're all on there. Oh, I've kept us way over time. We haven't even gotten to live charts. Okay, if you're in here tonight, we're going to do it. We're doing a bonus thing where you can get a free guest pass member to our weekly Option Edge member, which is the options room. Again, we've got about 25. I guess we're up to 40 people there. That's where the conversation is directed more toward options. We got some very good option traders in there. People that when they put out an idea, you definitely want to look at it. And we take time I come in once or twice a day, and we put out I do comments on which trades are looking good. So anyways, I think Jim has put in the link, Becky has put in the link. Try it for 30 days. The one thing I think most people will realize is you probably get exposed to lots of different trading programs. I tell people whatever trading program you're using, if you overlay candlesticks on your charts, you're going to see much more clearly whether your trading program is working, those recommendations are working. I use candlestick signals as my top priority or my top factor, and then everything else is just confirmation. Okay, so let's do some live charts. The one thing I like to illustrate to everybody is that candlestick analysis is just merely common sense. Oh, I want to get rid of that. Common sense put into a graphic depiction. When I was learning I'd even been a stockbroker for 8 years before candlesticks came along, and every time I looked at candlestick charts, there was one common thread through my learning process, and that was this makes sense. And the more I looked at it, the more sense I made. Okay. So then we're going to start. What we usually do when we do these sessions is we start with the analysis of what the markets did. As we saw today, look what happened in the Dow. We're in the overbought area, above 80, and yesterday it traded lower but did an indecisive trading day. I'm going to make this big enough, I hope, where everybody can see it. So what is our simple criteria about the T-line? You stay long as it stays above the T-line. What happened today? The Doji rule. It opened lower and traded lower. And where did it close? Below the T-line. That puts a little bit of a warning out there that maybe they're starting to sell off. Because notice what's happened all the way up. They really haven't closed below the T-line. Now, if you look at the NASDAQ, did a bearish Harami today. Again, a bearish Harami is a open below the previous day's close, and they close it above the previous day's open. So what are the two factors that you have to look at this today's trading? One, it did a bearish signal. Two, it hasn't closed below the T-line. So what's our simple analysis tomorrow? If they open it lower, what are they telling us? They have a sell signal, and they're trading back below the T-line. You probably want to start closing out some long positions that don't look good. On the other hand, if they open it positive and start trading positive, what's it telling us? Telling us the T-line is still acting as support. You can stay long. Whoops. Oh, I think I even had some. So one of the questions I always get asked is, how long does it take to really learn how to do candlesticks? I always tell people when I started learning candlesticks, I didn't have anybody to confer with. Obviously, it's much easier to learn something when you've got somebody around to give you a second opinion. Back when I was learning it, I didn't have anybody to give me a second opinion. I tell people the only time I could get a second opinion is when I'd go to the doctor. I'd say, "What's wrong with me?" He goes, "You're fat." I said, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So right now, you've got the benefit of, I tell people, if you learn from your mistakes, I'm one of the smartest traders you're ever going to come across. I went through the process of learning how to use candlesticks correctly and learning how to use a candlestick analysis to put all the common sense into our evaluation. So you're looking at the indexes today. The S&P 500 did a bearish Harami, possibly a top right there. If it opens lower, what's it telling us about our uptrend? Might be stalled here for a while. I'm just going through because I didn't have time to sort these out. But this is the type of thing that you want to be looking for. There's your morning star signal coming out of the oversold area. And where did it go today? Not only did it come up above the T-line, the 50 and the 200, but it broke out through this flat handle. What do we got going on? There's a scoop pattern. This becomes a high probability slingshot effect to the upside. That's just basically from knowing what type of patterns occur. We had kind of a belt hold, bullish engulfing signal on our left-right combo on Hershey. Now, is Hershey a very dynamic moving stock? Not necessarily. Let me see if I can make this. But what did this do right here? This probably took out a lot of sellers. What's that tell us? Any buying from here is going to have less sellers in the way. So this becomes a good option trade setup. Jules, yes, it tells you exactly what you want to be looking for. If we wake up tomorrow and it shows that the pre-market futures on the Dow is going to be opening down 70 points, well, we're already below the T-line with a sell signal. That's a pretty good indication the selling is continuing. On the other hand, if we wake up tomorrow and the Dow is showing it's going to open up 50, and that the NASDAQ is opening up 20. What's that telling us about the trend in the NASDAQ? That they're staying above the T-line. Ahmed, that's why these training, I tell people, you don't have to learn formulas. You don't have to be a technical analyst. All you have to do is recognize the signals and patterns, because we're using the most basic of all criteria, and that's human nature. Hold on to your individual ones until I tell Jim to do the double line. And because we're running behind schedule tonight, just do one pick. Now here's Party City. There's your morning star signal. And what makes this a stronger morning star signal is because on this side, not only did they come up and close above the halfway point of this candle, but they gapped up from a doji. So even if it wasn't a morning star signal, it's your best friend signal. Where do you think your next likely target's going to be? Probably up here. So not only are you able to see when the buying occurs, you can pretty much calculate where your targets are. So if you were buying here and it was at 60 and it could go to 67, there's different spreads you could have put on that would have made for very effective profitability. So if you're looking at series, there's your kind of your bobble breakout. Notice when it got indecisive where it pulled back to, right smack dab onto the T-line. There's your bullish engulfing. And what was the significance of today? Pretty much was breaking out of this slow curve. If it opens positive tomorrow, you can be buying it, because what do you got going on? Wave 1, wave 2, wave 3. You buy this tomorrow. Anytime you ask that question, put the symbol in front. I don't know which one. If you're looking at Siri, yes, I'd be buying this one tomorrow. Who's hand right? Oh, Southwest Airlines. Look what it did. Not only did it come all the way back down to the 200, but did a bullish buying. What did that tell us about this whole trading day? Once again, they took out a lot of sellers. Had kind of a bobble breakout. You probably have more upside. Ahmed, hold on to your Party City. Yes, you could be buying this one. Now, I say you could be buying this one. Right now, I'm just going through the ones that during the day, people pointed out in the chat room. I didn't even have time yet to do the scans tonight for the best possible trades. Look what we've got here. Kind of your left-right combo. Broke through this little downtrend. Now a doji sandwich that definitely broke through this downtrend. Where do you think our next potential target could be? What usually happens is if you can recognize a trend and there's consolidation, they move pretty fast right back up to that trend area. I will. We did Hershey, right? Hershey, big bullish engulfing. We did the Capital One. Capital One broke out through here. Notice how they did it with a bullish Harami, gap up. And this is what you call the message. What do you want to see when they gap it up? We want to see buying. But they closed it lower. But what was the message? The message was they gapped this up, a lot of strength, then there was profit taking, so what do we look for? We look for when the profit taking's over, because this strength right here is telling us there's going to be more upside. If I can find when, as I say, I haven't, I can tell you a short one right off the bat is Devon Energy, somebody pointed out. Look what you've got going on. Wave 1, wave 2 that came back up, failed at the T-line with a bearish engulfing. If it opens lower, what's it telling you? That this whole support level is not acting as support. You could probably have wave 1, wave 2, wave 3, which also could correlate into a downtrending channel, which means you could be heading down here. You're looking for things that everybody else is watching, which is the trend channels, the resistance levels. Okay, I'll do Home Depot. Home Depot, not a very exciting stock because it's an institutional trader, meaning the institutions buy and sell and they don't trade it, they just hold it. But it's still moving up. You can stay long on this. Again, hold off on your individual ones. I'll get to them as soon as I tell Jim to do the double line. So here's RareX. Now look what's happening to RareX. You can see kind of the wedge formation. And today it broke out. So what do you got going on? Wave 1, wave 2, wave 3 could be the same magnitude as this wave. Now, if you can calculate that, maybe you just don't buy the stock or buy the calls outright. Maybe you think, all right, if this moved from 20 to 34, 14 points, 14 points from here would take you almost up to 50, let's say 48. Maybe there's a couple different spreads that you could put on that were more effective. The next buy, Susan, if we wake up tomorrow and the markets are showing that they're opening positive and RareX is trading positive, that's where you buy. I'm not trying to buy at the absolute low, and I'm not trying to sell at the absolute top. I'm trying to get that high probability fat part. And if you keep getting high percentage correct trades, your compounding effect is going to be extremely or much better than trying to find things where you can buy at the absolute bottom and sell at the absolute top, which is very hard to do. RareX, that could be too. If you look at the options and you can't figure out what is the best option strategy because the bid-ask spread might be too big or the price is too high, remember, you're in the business to make money. And if the playing field is telling you, yeah, I can't make money with this, go on to the next one. Big bullish engulfing. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. So the breakouts, look at Beezer Home. Wave 1, wave 2, wave 3 starting with a bobble breakout, bullish engulfing. If this is wave 1, where's our expectation? You can see there's a little gap right here, so at least that would be your a target to look for. Oh, silver today. You can see it did a bearish engulfing signal in the overbought area. It's trading a little bit positive after hours. But if you are long silver and it opened positive, where would you put your sell stop if it did a bearish engulfing signal? Right down here at the close of the daily chart, because if it opened here and started trading below that level, they're still selling it off. CW, you don't buy Delta because let's see, let me figure out a one to see what these are. That's probably not going to be good. Boy. Frypan bottom breakouts. Now this is a J-hook pattern breakout on Craton. Hold on, I'm trying to find the reason. Maybe this. Gonna have big Frypan bottom. What's happened to your delta during that time? The delta in here has absolutely nothing with what our expectations are coming out the other side of a Frypan bottom. That's not a Frypan bottom, but that's a good gap up breakout. Why is that over there? I don't know. Let's see. Ow. So you're right here at this breakout level with a pattern that showed you Doji, hammer right off the 50, gap up, or not gap up, big strong move. Now they've broken out. What do you expect? Probably more force to the upside. Yeah. Oh, Echo. Yeah. Susan, that would be a good illustration. What was your delta doing developing right in here? Nothing. Now, if this moves, it's not going to have anything to do with what the previous delta was. How do you know the options are too expensive? If I was buying something where, but if I could figure out where my my target was, let's say 26, and the 22s were selling for $3, am I going to spend $3 for it to have to go all the way up to 26 to go to $4? That may be too expensive. And that's one of the trainings we do is how do you the first important criteria for identifying a option is number one the chart. Is this a good trade? And secondly, which is the best option trade? And that comes down to one simple factor. What is the math? If the math doesn't make sense, move on to something else. Okay. So if we can see this Frypan bottom and it broke out right about there, if we can see a Frypan bottom, what do we expect coming out to the other side? A breakout, implying there's probably going to be a lot more upside. Where was the breakout? Right there. I don't know what. So, had a big move today. If this opens positive, what does it tell you? That this profit taking of today is over. It's still heading higher. So again, everything that we look at as far as breakouts, little slow curve right here, big Frypan bottom. Where's our next likely target? Right up here. Now, 35 or 37.50 is our next target. Maybe buying a 35, selling a 37.50 spread is your likely trade. Okay, that's about all I got because I didn't have time to do scans because of the darn computer. Yes. That's what we do because there's two functions. Again, the first is identifying the trade, meaning the chart, and then identifying which option strategy, whether it's buying the calls outright. I'll show you one. We've just set up strategies on Western Digital. Buying the calls right here because you had a little doji sandwich breakout. We were buying as soon as it started breaking out. which was the same scenario we did over here on Micron when it broke out. So you have different strategies. Whoops, that's not what I want to do. First strategy is, again, it could move 20 points over the next 6 weeks. So the calls may be that one strategy. Then I can kind of calculate that maybe over the next 2 weeks, it could move to 65, not the full length of this. So maybe I buy the 60s and sell the 65s. That might be the correct call strategy. Now, when I look at it, I want to make sure the math works out. Pablo, it's not difficult at all, and I know on Thinkorswim, if I put in buy this, I want to do a vertical, they'll bring it up. I'll put in, I want to buy the 60, I want to sell the 65, they'll show you what price it is. Well, now I own it. Let's say it gets up here. I just click the same, I just say sell my spread, and it will show you what price it is. You click on it, and they close it out at that price. Okay, any other questions? Oh, I get people still asking. The private training session up at the lake is 2.5 days, starting from A to Z. Starting with the doji, going through the 12 major signals, the patterns, and then the high or top rank signals and patterns, and then everything else applied to it. How to use gaps, how to do the trend analysis for knowing whether you want to be predominantly long or short or a mixture of both. Where to set your stop losses that make sense based upon that trend. How to get ready to take profits. And then finally, the final day when we take all that information, we do our scans and say, all right, here's how we go through our scanning process to find the best trades that we're looking for. The price of the lake is $4,900. Now with that, you don't have to worry about room or food. We feed you at good restaurants right on the lake. We eat at some of the wineries overlooking the lake. Everybody stays in the same house. We get up in the morning. We have breakfast on the deck. Our computer screens are set up so that you can be looking at the computer screens and looking out over the top to the lake. When we take our breaks, we're stretching our legs out on the deck. The whole reason for this is that you get a comprehensive learning process. It's not like going to some of these seminars they used to do in the hotels where the speaker would come in for a couple hours and then when they took a break, the speaker would disappear. You're stuck with me from the moment you get there to the moment you head out. And we talk investments or candlesticks at lunch, dinner, during the breaks. And if it's real hot, sluggish, we all put on our bathing suits, jump in the lake, cool off, and then sit at the screen again. But the whole point of it is, at the end of the session, after 2.5 solid days of getting this all crammed into your head, you're not only going to have a much stronger perspective on what to be trading and trading successfully, but because of the common sense probabilities built into candlestick analysis, all the things that you are mentally doing wrong kind of get cleared out of your head. You're not making those mistakes. So not only are you recognizing what to do, but the concept of candlesticks being such a common sense investment program moves you to where your emotions are basically knocked out of your trading program. So on top of that, we've got about $5,000 worth of training videos on the website. If you, after you go up there and you say, I want more training on the top rank signals or the 12 major signals, you just email Abraham and say, I went to the lake, can you send me this video package and that video package. Also, you get a 12 months free membership to the lake. Keuka Lake, yes. So the thing that is most striking at the end of these sessions, which I get from a big percentage of the people that have come up there, is they say on Tuesday noon, say, you know, the light has come on. I now understand all this. So sessions like this afterwards aren't learning sessions. They're reinforcement or confirming sessions, just adding to your, because you've seen everything and you understand it. Now you're seeing it again and being reaffirmed that of why they work. That's right, the Saki initiation. You know of any software that shows the most profitable option in a chain would be for specific moves? No, I don't, Frank. But what I try to tell people is anytime they try to automate this information, you're moving away from actually understanding it yourself. Once you learn which trading, option trading strike prices and time frames, once you learn it, which isn't difficult, now each night you may only spend 10, 15 minutes identifying the best trade setups. So anyways, try the 30-day free trial at the options room. You're going to get way more than your money's worth. How about that? Okay, Jim, let's go ahead and do the double line. And Neo, did you remember when I said we just want to do one? I guess you didn't remember that. Facebook, kind of junky right now. If Facebook opens low, look what we needed to see. We need to see it open positive and trade positive. The fact that it closed back below the T-line, if you were long, you should have been out of this trade. Lulu, stay long. Don't let it close below the T-line. And Western Digital, no, probably not too late. Either you've got this wave to complete or this wave to complete. Twitter, another one that's had a hard time getting through this resistance level. This, if you're long, it has to open positive and trade positive. Notice your bullish doji sandwich right off the 50. But if it closes back below the T-line, close it out. That's telling you your probabilities have gone against you greatly. Boeing, when it got to this level, you can see that you had a bearish Harami and it started to fail. I know a few people in the options room right now are short Boeing because when it did a doji gap down, what's that tell you? That's your bearish best friend. And then they gap down below the 50. What does that tell you about any support at the 50? It's not there. Home Depot, didn't we do? You can stay long on this as long as it stays above the T-line. Netflix was a good example of when you saw the sell signal, notice how indecisive it was up here. Doji, spinning top, shooting star, closed below the T-line. Very simple rule. If you see a sell signal and a close below the T-line, the probabilities are pretty strong that you're in a downtrend. Where was your first logical target? Probably back to the 50. So anytime I'm owning something and it closes below the T-line, I close it out. Now, would we anticipate this? No, but as long as we were short or in puts and it was below the T-line, you stayed short. Now, over the last, if you were short, you started covering because if it bounced, where do you think it was bouncing to? Back up to the T-line. I wouldn't be a buyer until you see it close above the T-line. MasterCard, nothing wild to trade. but a slow, steady uptrend. Again, more of maybe a spread option trade. Advanced micro still has to break out above this level. If it closes back below the T line, you close it out. It's not going anywhere. Coffee, still in a downtrend. I think, F, not F. This is the, no, darn, what is it? A-C-A-U. Coffee. You can see how it failed once it came down through the 200. They couldn't get back up above it. This is what we call a blue ice failure. The 200 was the ice. It fell through. Couldn't find the hole they fell through. They drowned. They could go to the bottom of the pond, which was at least the next support level. And Bidou right now, as you can see, failed at the 50. I wouldn't be long or short Bidou. There's no direction. Oh, Sammy. Stay long on this. That's kind of your double doji sandwich. Halliburton. I would have, if this one opens lower tomorrow, close it out. Look what happened here. You can see where the resistance level was. If it opens lower, I'd close it out. It's pretty much telling us they didn't break out of this area. And GPK, I would stay long, as expect a 45 degree from here, and I'd have a safety stop just below the low. If they are able to come back through that level, that means they're selling it off. And Twitter, same scenario. Did we do this one? Kind of having trouble getting through. If this one opens lower, close it out. Apron, you can get ready to buy this one. You can see how they've supported right here on the T-line, did a bullish engulfing. I wouldn't be afraid to be a buyer of this on positive trading tomorrow. And then again, just use the T-line as your stop. Didn't we do Facebook? Yes, you want to be out of this one. Are we all doing repeats here? Okay. What we got? Disney, nothing yet. Disney did have this breakout of this level, but then again, when it closed back below the T-line, it told you to be back out of it. There wasn't enough strength. Now it's starting back up again, which now is telling you you're probably in a slow uptrend, which means the free trial link requires a password. SP, if you have problems, just call or email Abraham tomorrow. Diebold was a Frypan bottom breakout. Look for a 45 degree off of here. ATVI, a little support here. I would suspect your next target is up here at the 50. Then you have to watch to see what it does at that level. Alta, not anything wildly exciting. It may be a slow uptrend, and I would stress slow. You could buy this on positive trading with the expectation of it moving up here, which is not a big percentage, which means this is more of an option trade setup. APD, that's not working. HMHC, Frypan bottom. You can still buy this one on positive trading. I don't know how I get all these lines on here, but that's what you're looking for right now. And you can see that it just barely is breaking out through the 50. You can buy this one on strength from here. SPWR, You stay short if you're short. Look at your Doji spinning top, followed by a bearish engulfing, your bearish left-right combo. Where do you think they were bringing it back to? At least the T-line. What happened at the T-line? They did a bearish Doji sandwich, which implies there's more downside, which also tells you you're below the T-line. Where's the next likely target? Right back here at the 50. STX, there's your bearish Harami. What were we looking for here? Breakout. Same scenario. If they open this one tomorrow and you are long, you close it out. If you're long, it needs to open positive and trade positive. If you're not long and you're looking to buy, you still need to wait for it to break up through that level. I think Google, if I'm not mistaken, was up pretty strong. Forget where it is, but it's way up here. You can see how it's supported here. That tells you at least Google's got more upside. Okay, still scrolling. All right. STT, another one that is going to tell you what to do if they break out through this level. Wave 1, wave 2, wave 3, possibly taking you up to the 200. If it opens lower, they're coming back to the T-line. I'd come out of it and wait for the next buy signal. Mohawk, nice, slow, steady uptrend. You just stay with it. Yeah, Google was up and Amazon was down. Google's up 100 points. All right. All right, everybody. I hope we got some education in your heads tonight. But the important thing is learn a few. This is all just common sense put into a graphic depiction. So with that, we'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.